Good morning and welcome back to Almus Market Mornings. Now, there are a couple of important things that's brewing, starting with the yellow metal, which had quite a move last week. Initially, the premiums of COMEX futures over spot prices shot up, something we discussed in Friday's podcast. Later, the White House clarified that this was misinformation. The premium has shrunk and currently is at $65. Moving on this week from the economic data front, US CPI would be closely tracked. But go to our rates expert, Mr. Rathi. Pankaj, great to have you back. Given the current Fed composition, we are having more members advocating for rate cuts. Mr. Miran may be confirmed by the Senate before September meeting. Bowman is calling for three rate cuts this year. Do you think a 50 basis point rate cut would be a possibility in September?
Uh, Thank you, Swaraj, and good morning, everyone. After a very long time, I got an opportunity to conduct or maybe record this podcast. Happy to join. We will come to the rates, but before that, the the tariff saga this time hit yellow metal, and we are very well aware that few weeks back it was I would say that red metal, that was a copper. So what happened is basically FT reported, and there was a kind of a circular which, or maybe a letter response uh, to a specific person, and which was mentioning that 100 troyons and 1 kilo gold bar would be switched to a tariff category. And that means that whatever the whichever the country is exporting gold to US, those country specific tariff rates would be applicable. At that point of a time, market interpreted, and all of us interpreted, that there's a possibility. It was a remote, but there was a possibility that 39% of a tariff will be levied for a gold export from Switzerland to US. The gold exports maximum happened from Switzerland. Around $62 billion of gold exported last year to US from Switzerland. It was looking very high, but the market reacted. Market reacted only by 1.5-2%. Gold future prices have went up higher, and approx 0.75% gold spot moved higher. After 24 hours of this leak by FT, there was a statement from a White House that it would be clarifying the confusion created on a gold, and gold futures settled back. So when gold futures moved higher, it went as high as $35-$30 per troy ounce, and it settled closer to somewhere around 34. I think it's dealing now around 34, 40, 50 range. So approx $100 down move from some spike which hit 35, 34. During this time, and people have also highlighted, there are two other major development happened. One, Stephen Miran, who is a basic architect of an entire tariff uh, narrative or tariff structure uh, from a US side, has been appointed as a kind of for a few months, but it will be likely to extend uh, on the Fed board, and that added to the dovishness to the overall gold. Dovishness to the dollar and bull impact or pulse impact on a gold. During last week also, it happened that one of the Fed member has released gold revaluation note also, which market is anticipating at some point of a time. US is likely to revalue the gold and try to curtail. It will not have a major impact on a deficit or outstanding debt number, but it's actually a kind of a, you are maybe giving a lesser appeal to a dollar and bringing down the total debt. So all this under these development gold rallied and it came back. Coming back to your question of a 50 basis point, we have to see first what happening in the post-tariff numbers. Market anticipate on this Wednesday that core CPI, which will be touching 3%, annual CPI, and month-on-month is 0.3%. If it moves higher than this, I have a doubt that Fed would be able to cut 50 basis point. Even I have a doubt that Fed would be able to cut 50 basis point. Even the numbers are around 3%. But yes, whether the time has come to look at the jobs versus CPI. The recent non-farm payroll have actually created that panic in the overall rate setting processes and among the market participants that rates are too high, and to give the push back to the economy, looking at the non-farm payroll, these should be rates would be brought lower. My sense is in this calendar year, we may get maximum 50 basis point of a rate cut, and that, according to me, had been already priced in the market action. Another important developments which were going through during this week was a kind of an announcement that Trump is likely to meet Putin on this Friday in Alaska. Now, lots of things are getting mixed up. The way uh, Trump has imposed additional tariff on India and Putin agreeing to meet Trump, and there's a side conversation between Putin and Modi, and there's a side conversation between Modi and Brazil president. So it looks like now there's a mix of geopolitical and trade, which is being played. Whether Trump is playing the India card, bring Putin to the table of a negotiation with respect to Ukraine. We won't be able to. Basically, the top line news, we won't be able to interpret what is going on. But yes, important developments are happening. India tariff is another thing which is very, very important, because from 27th of August, additional 25% of a tariff would be coming in Indian picture on the exports from India to US. Now, it's important that they have levied, or maybe they have put up the date from 27th of August. US representatives for a tariff negotiations are coming to India on 23rd and 24th August. So people are also, and market is also interpreting at this point of a time that 25% tariff probably will be taken back, because two developments, those guys would be coming to India, and there's a parallel conversation between the Trump and Putin. So all these things will play in the coming week in the market. Due to Russia-Ukraine war and the conversation between between US and Russia, we saw some impact on a crude oil also last week. Crude oil prices fell by 4%, and that's a healthy sign for India. This week we are seeing that this week deadline for the China tariff also is expiring on Tuesday. There not much of a announcement has happened yet, so those dates are also likely to get extended. Last week we also saw MPC India MPC conducted a meeting, and they had announced no change in the rate cuts. Market earlier were expecting that there would be some 25 basis rate cut or maybe a dovishness in the policy. That did not happen, and Indian 10-year yield also went up by I think 6-7 basis higher. Friday it closed at 641. So these are the developments on Indian bond market. This week, we would be seeing inflation both from US and India, which will set the course for a dollar rupee. A dollar rupee last week had been defended by RBI. That's clearly being shown, and it was kind of a peak at a 87, 85, 90 range. Due to the weak dollar after non-farm payroll, we opened around 87.20, and then it was bought back. So we are expecting this range probably again during this week. 87.20 and 85.90. That's the likely weekly range for this week. A dollar has been weakened in last week due to non-farm payroll. We have seen a euro moving from a closer to 1.14 to 1.1650. So yes, these are the developments. Today morning, Asian equities are trading stronger. Indian Nifty may be also opening higher, but it seems that the range-bound action on the Indian Nifty. That's all from me, Swaraj, today.
Thank you, Pankaj. And of course, geopolitically, it seems there is 3D chess going on. A lot of developments. President Trump likely to meet President Putin this week. Possibility of a Putin-Modi meet as well, and of course a phone call between the Brazilian president and our prime minister. So lot of stuff going on. We also discussed on gold and the clarification from White House and the impact that it had on the gold prices and the premiums. The paper by the Fed on revaluation of gold reserves that added to the gold's rally last week. And of course, markets await the CPI numbers from India and US both this week. That's it from us today. Thanks for listening. We'll catch up tomorrow with the fresh round of updates.